First of all, I wanted to thank you on behalf of everyone here involved with the Plural Art Fair, which is the most important art fair in Montreal, and also, of course, on behalf of our audience for having accepted the invitation to share your knowledge on the global art market today. I'm also very honored to have the privilege to be interviewing you today. Thank you.
Thank you. My pleasure.
So I'm going to start with a little bit of an introduction for our audience on who you are. Claire, you are a cultural economist who specializes in the arts, antiques, and collectibles market. You hold a PhD in economics from Trinity College in Dublin. You also founded your company called Arts Economics in 2005. Even more importantly, you are the author of the much-awaited yearly report, the Art Basel and UBS Global Art Market Report since 2015. UBS, for the benefit of our audience, is a Zurich-based bank providing financial services in over 50 countries and to many wealthy art collectors, I'm sure. So your annual report is based on a survey of 6,500 galleries, of which 700 are international galleries, as well as 600 high net worth collectors, 2,700 collectors based worldwide, monitoring more than 5,000 auction houses, and many more sources, I'm sure. Your Excel spreadsheet must take forever to open.
They're getting bigger, okay? They really are.
But you started even earlier to author these annual report on the global art market. You started actually in 2008, if I'm not mistaken, with the TIFAF, the European Fine Art Foundation, until 2015, and then with the UBS Art Basel. So as I would quote someone who has said about you, Claire is the world's leading art market economist. Hard to disagree with that. So here's my first question for you. But first, I would like to start the question with a quote from an important player in the art market, Art Price founder and chair Thierry Herman, who told the France Presse agency in 2012 that, and I'm going to read his quote, there are more buyers than ever. In the 1950s, there were 500,000 collectors worldwide. Now there are 300 million art consumers. So I guess since 2012, this has even expanded more a decade later. So my first question would be, in the past 18 years, the global art market has proven to be COVID-proof, financial crisis-proof, and even stock market crash-proof. Do you think its exceptional performance can be attributed to the larger number of art consumers worldwide, or to the financialization of the art market in which a larger number of wealthy people invest to speculate in art rather than for the sake of collecting art, or both, or not, or why people are more and more investing in art instead of traditional investing tools such as the stock market or the real estate?
Sure. I think trying to figure out the number of collectors is very difficult because it's such a hard to define kind of phrase to become a collector. So, I mean, I think to some degree, but there's probably a much smaller subset of people that are buying regularly or collecting over the long term. So I definitely think this has helped the art market, but I don't know if I would say the art market is completely recession proof. I think it's reacted very differently to recessions in the past. I think each crisis is quite unique, and I think the art market emerges in slightly different ways after each one. And I think if you look back, say at the 1980s, the market was booming. There was all Japanese buying at that time, very much in the impressionist sector, very, very speculative buying. And, you know, when there's enough speculators in the market, something always happens. And it's usually something completely external, some catalytic event will happen. You know, in this case, it was the stock market bubble and burst and the economy issues in Japan. And there's a rush for liquidity. Everybody tries to get out at the same time and the bubble bursts. And this was a very abrupt collapse in sales. And if you think, I think it was 1991, the market fell by about 65% in 1 year, very, very quickly. And it was really, really slow then to recover. It took maybe 14, 15 years for the market to recover again. And that's because it was just reliant on the US and European buying and selling, which it had been before the Japanese came in. And then if you look at the more recent global financial crisis, this was an actually much worse recession from 2007 to 2009. The art market lost a lot of value again, but it bounced back really strongly. And one of the reasons why it bounced back so strongly and so quickly, it didn't take this kind of 15-year cycle again to come back, was China. China emerged from nowhere and really helped the recovery. I mean, the recovery was happening in the US, but also this massive input from a whole new marketplace that was never there before. So I think the global diversity of the art market has most certainly protected its downside. And I think since then, we've seen kind of ups and downs of different kinds. But definitely, it's not just the number of buyers. I think it's the diversity of buyers from different regions. If one segment is going down, and we've just seen this in the report I've just launched a couple of days ago. You see, last year, growth was pretty muted. It was about 3%. The market went to about 68 billion, but it's because the US had a really good year, really, really strong year. China had a very poor year because of the lockdowns and the zero COVID policies and all that. And Europe was a little bit more flat. So this kind of diverse performance balances the market out. So it's a little bit more protected on the downside. So I think each crisis is a little bit different, but it's the number and the diversity of buyers, I think.
Yes, but I vividly remember you reminded us of the Japanese buying on the market in the late 80s. I vividly remember since the mid 80s, the stock market walking hand in hand with the art market. And when the art market crashed, of course, the stock market crashed, the art market followed suit. But nowadays, it seems like there are more buyers out there on the art market because the buyers come from very different background in terms of income. They just don't depend so much on income from the stock market.
Sure. Yeah. I mean, it does. There's all kinds of, you can find from different kind of more academic studies I've done, you can see that the art market's so diverse as well. Different segments of it go in tune with the stock market and against it. And, you know, some people treat it as a hedge against what's happening in financial markets. And, you know, you can see that even at the moment, people were kind of, some people still see it as an inflation hedge. Some people don't think about the financial side of it at all. And I think that's probably the majority. There's actually a kind of a spectrum, I think, from people that don't care about the financial side to people that care only about the financial side of buying art. I think most people are somewhere in the middle, which is probably a safer place to be, you know, than kind of not caring or caring too much. But yeah, no, it is interesting to see the similarities and I mean, what it does tend to track is high net worth wealth. You know, if you look at patterns of wealth over time and where wealth is centered, the art market has followed that to some degree, but it also you know, it follows things like where it's in terms of where the sales take place, where is the most comfortable regulatory home for buying and selling. Mm-hmm. So this is what happened in the 1960s when the market moved from Paris. It wasn't just that the money had gone to New York and London and certainly New York, but it was because Paris was caught up in a kind of a quagmire of regulations and restrictions and levies and taxes. And it was much easier to sell things in New York. And that's still the case. That is still the case a little bit, you know, and I think the markets in Europe are realizing that more and pushing to kind of free up the trade a little bit more. But it's still one of the easiest and safest places to buy and sell tends to be New York. It's kind of a little bit more straightforward than some of the other.
Yeah, the art market certainly offers a pretty picture from the outside, but there's something inside. I mean, and that's the subject of my next question to you. Um, so would you agree to say that only the upper market, and by upper market, I mean sales over $1 million, and maybe no, not maybe, but certainly the middle market between $100,000 and $1 million as well, are doing better year after year because their exceptional performance was achieved at the expense of the lower market below $50,000, which has plummeted in the past decade significantly.
Yeah, I mean, we see this with the dealer survey we do every year. We have seen the high end tending to outperform others. It's funny, not during 2020. Some of the smaller galleries did a little bit better than the bigger galleries, and this was the big hopes that this was going to level the playing field, and it was the movement online was going to help smaller galleries and things like that. But as soon as sales started to kick in again and events took over again, I think we saw that same pattern of the high end pulling away, and it was the same last year. Dealers tending to sell over, having turnover over in excess of 10 million, had a big uptick of 19% in terms of growth, and then the smallest galleries with turnover less than 250,000 saw their sales decline last year. So it was a really like a case in point. And I think what was even more clear in the last year or two is if you look at the auction sector, and the auction sector is where we have the transaction by transaction level data. So you can really divide it up by prices. I mean, I do the surveys each year of the gallery sector, and I get their aggregate sales, but I don't have the micro level transactions. But if you look at the auction sector and you break it into price segments, last year was so clear. Every segment under 10 million declined in value, and it was only the 10 million plus segment that had 12% growth. Yeah. And then if you look at the overall auction figures, I mean, I personally was expecting an absolutely boom year because there was these, 6 sales in excess of 100 million. There was the Paul Allen sale. There was all of these amazing jaw-dropping numbers. And then when I put all the auction data together, I must have done it, I'd say about 100 times to say, why isn't this better? It was not coming out as I expected at all. And it was because it was just a very thin high end that was actually kind of pulling the market up a little bit, exactly, but not enough for strong growth. So it is at the expense of others. And if you look at last year, everything else below 10 million declined. But as you just said, perfectly right. If you look over a 10-year period, it's only the 1 million plus segment that actually increased in value over 10 years. And I think I measured it in the report from 2009, the kind of bottom of the market, to now. And the high end, this 10 million plus end, had grown by 700%. The sub 50,000 had actually only grown by 10%. And if you adjusted that for inflation, it actually has declined. So adjusted for inflation, the sub 50,000 segment has declined from 2009 to the present, which is kind of, it's a worrying thing, because that's where all the transactions are. So all the value is heavy in the high end, but that's a very thin, small number of sales. Whereas the big volume of sales, the big number of transactions, is at the other end, which is declining in value.
That's a lot of figures, and I want to get our feet back on the ground with my next question. I mean, all those figures. I mean, what does that say in terms of art buyers' behavior? Does it mean that they are more informed, just wealthier, or more discriminating because they are more educated about art, or just because buyers are attracted to the so-called lifestyle the art fair circuit allows them to experience, to socialize, and to have interesting conversation about the art they've just seen?
I mean, it's a market that's driven by kind of conspicuous consumption, what they call in economics, conspicuous consumption, where, people are buying things where the demand gets higher as the price gets higher. It's kind of contrary to normal rules of economics. But, I think there's, because it's a large sort of infrequent purchase for most people. It's not something you do every day. Even if you're a collector, it's still a pretty infrequent purchase. You're not doing it every week, probably. Even the most kind of prolific collectors are probably doing it a little bit less often, but it's a large, infrequent, often expensive purchase. So people are nervous about it, especially newer collectors, that they don't like to make a mistake, and they don't, because it's so subjective what quality is. There's no way of kind of really judging apart from either doing tons of research or relying on a lot of expertise. The other way is just to look at what successful collectors do and follow them. And I think this is what happens. People look at what other collectors are doing and they think that the only way I can get something good or do well as a collector is to buy something expensive, thinking I have to get in and I have to buy something that's over $1 million for it to be good. And it's so kind of contrary to the reality of the market, where there's so many different prices, and it's such a kind of a democratic market in terms of price structures. There's so many different artists to buy, but it's just people are risk averse. They don't trust, even it's so aesthetically and taste driven. They don't trust their own judgment. And one way to reduce risk without doing all the research and doing all the legwork is to just copy what other people what successful people have done. And that's what creates this very narrow focus on a very small number of artists and a small number of sales. And it kind of becomes a self-fulfilling thing then, because more and more of the attention is just on these few names and these few sales, when there's so many others that are equally talented, I think.
As we say, I mean, the first decision you have to make in a purchase of an artwork is, do you like the work? Will you enjoy it?
Yeah.
And the second decision is financial.
Yeah.
You mentioned earlier, you confirmed earlier that the lower market has plummeted. Would you say that the lower market buyers have been replaced by a younger generation of art consumers who are more attracted to contemporary art? I mean, nowadays, the younger buyers, do they start their collection with contemporary art instead of lower value secondary works? So instead of buying a little drawing by Picasso done on a napkin, they would start with buying an emerging artist work.
I think young collectors do tend to buy works of their generation. That's something that people do until they get a little bit more experience and possibly learn a little bit more about other sectors. So it's easier to maybe understand artists from your own generation sometimes. But I have seen some increasing interest in looking back, and there's certainly a lot more value now at the moment, I think, in a lot of older sectors, including decorative art and antiques, but it's just, I think it's the way our homes and everything are now too, that you might have one piece of antique furniture, but there's very few people that have a beautiful home that you could fit a whole lot of things in. So
the so-called accent furniture.
Yeah. I mean, that's what it is. It's the way people are. But it's I think it's very interesting to see how it'll turn out in terms of things like digital art. Will we start really seeing more young collectors using screens as in exhibitions in their homes? That this is a really fascinating, I think, when we start consuming art digitally rather than having digital art as a kind of a similar medium to just a different in the same format. I mean, that's when it'll start getting really changing. When we saw dealers' sales in the report last year, 5% of their sales were digital art, and that's up from 1% or something a couple of years ago. So it is small still, but it's growing, and there's a huge amount of interest in that area still.
That's interesting, because that's what's happening in music, the dematerialization of music, and it seems like it's starting to happen with digital art in the art market. And the physicality of an artwork has always been very important and very decisive in terms of value. I mean, but if it's digital, I mean, it's kind of a very
difficult. It's difficult, but I mean, we didn't think it was going to happen to music either. This streaming and or film or all of these other arts sectors. So it's we could be all proved wrong.
Right.
I hope not completely.
Okay, I'll move on to my next question. Many times in past interviews, you have stated how difficult it is to quantify the art market with all its sub-markets that are so fragmented and opaque. In your 2019 UBS Bank and Art Basel report, you nonetheless estimated the total value of the global art market at 67.4 billion. And I think this year I've read the highlights, it's 67.8. 0.8. Yeah. So I personally think it takes a lot of courage to advance such figure, knowing how it's difficult to quantify the value of this market. So obviously, I mean, there are more fields to be explored, and I wanted to know, among the future areas of studies in the field, do you consider tackling the following aspects of the art market? I have three in mind. The first one would be the licensing of artworks for merchandising by important foundations or artists' estates, such as the Warhol Foundation, who, may I remind the audience, has raked in a whopping $500 million in licensing for coffee mugs, T-shirts, snowboards, and whatnot. I think the licensing truly is part of the art market, don't you think? And it should be addressed.
Absolutely. I think that's fascinating. These iconic kind of brand name artists, Warhol, Basquiat, there's hugely successful licensing programs that have been set out. And I think it's not just interesting commercially, but it's really interesting because that's the way people are getting into the market. They're getting interested in art. They might be buying a cup or some trainers or whatever it is, but that they're becoming interested for the first time. It's becoming a show. This is what I'm interested in. This defines me in some way. So it's actually important in a kind of an incubator type way for collecting as well, for buying original works as well. It's not something that I've measured, but I mean, so it would be a fascinating one to look at, even to the scale of these iconic ones, and then some of the smaller estates as well, to see how they can use that merchandising and franchising and licensing money to support things that they need to do to support their exhibition programs or whatever else is they need to fund. So I think that's a fascinating one to look at. There's so many areas I want to study. So, I mean, for me, I actually am very interested in doing more. I get the sense over the last few years that artists themselves are also living artists are making more sales themselves. And that's actually how I started out in my research. When I came out of kind of academia, I looked more into researching artists and their careers and how they make money. Unfortunately, it was very not very much as was the kind of conclusions to most of the studies I did. It was very, very low kind of incomes for most artists in general, but kind of ways they can generate revenue streams and things like that. And I do think that this is something dealers have brought up over the last few years. There is this disintermediation in some ways of artists selling on their own paths, not bypassing galleries necessarily, but working with a gallery and working on their own sales. And some artists really successful in their own right on their own social media platforms. And I mean, obviously the NFT thing, really drove kind of external selling by artists absolutely crazy. There's so many people doing their own thing there. So I think that would be a really, I just get the feeling I cover this very traditional galleries and dealers and auction houses. They're my world for the last 20 years.
Because
a lot more outside that world.
Yeah, because of course, licensing and merchandising is one thing. I mean, it's a step away from the art, if you want. Yeah. But what about the second item? Second field of study, the limited edition reprints of works by prominent artists such as Basquiat, who passed away before having the opportunity to create more work, and the estate is doing limited reprint edition of his drawings, and they sell for quite some money, a few $1,000s, and sometimes 10,000.
Yeah, I mean that is a very interesting area as well, the posthumous kind of creation of works. And I know some colleagues in the kind of legal industry and other kind of art historians have looked into it. They're produced a book, I think it's just come out recently, on posthumous creation and printing and the legal and economic aspects of that. So I mean, it's a fascinating area. My problem with most of these is just I need to clone myself to be able to do it, because there's so many fascinating things, and there's so many tangents to go on that are important. But I do get the sense that I think you're very, very true in saying that we need to try and come together to get a better picture of what the art industry is doing. So that's licensing, that's this posthumous prints, that's what artists are doing. And my segment that I've been doing is just a kind of a small, not small, but it's just one component of that. So I think that's really, the art industry would be more the better. I mean, you said I was a leading art economist. That's just because there's not very many, or there's not, how many is there? So
that's right.
Not as many. And there's a lot of academics that are doing fantastic work, but they're busy teaching as well and doing other things. So,
and my third and last field of study in the art market would concerns the salaries of the art market workers. I mean, in your TEFAF report from 2014, you estimated the number of art advisors worldwide at 300,000. That's a lot of people. Will you eventually tackle this in your report, or?
We do the economic impact, and I've done that more on a national level, because it's hard to when you look at salaries and things like that, it's sometimes hard to make strong conclusions about that in a global way. So I've tended to do that when I do a study on a country. I focus more on how the kind of salaries and things stack up. I've looked at things like kind of gender diversity and the kind of education levels and all this kind of thing of people working in the art market. And just to explain to governments, I think there's a kind of a mistaken view of the art market from a lot of governments and a lot of banks, unfortunately, that it's a commercial retail sector, that people just buy and sell things, they buy and sell for a profit, and they don't really understand what dealers do and the investments they make in artists, and that it's actually more like a service industry than just a commercial retail. So I think that's definitely an area that I'm working on in the background a little bit, but more on a national level than a global level.
Yeah. Well, let's stay a little bit on the global level with my next question.
Sure.
If there's a figure impossible to find on the internet, it certainly is the rank the art market occupies in the global economy. According to Forbes magazine, here's the top 10 of the global economy sectors. Oil and gas, second, information and communications, third one, banking, fourth one, retailing. It doesn't say if that figure includes galleries or auctions.
Yeah.
Fifth one, automotive. Sixth one, insurance. 7, construction. 8, consumer packaged good. 9, pharmaceutical and healthcare. And 10, metal and mining. But of course, you'll realize that those figures do not list, they don't even include real estate, military weapons, or even illegal drugs or human trafficking. So considering the list above, would it be safe to assume that the global art market could rank somewhere between the 16th and the 18th position? I mean, considering you admittedly very conservative $67.8 billion figure.
I think that would even be high. It depends how these things are measured, really. I mean, I think, as you say, it's probably included in retailing to some extent. If you look at luxury cars, for example, that's probably about 600 billion. I was looking at that recently in luxury goods. Luxury fashions, probably about 97, 98 billion. So they're all probably a little bit ahead of the art market. So if you break it down, it is difficult to define. Antique dealers are put with secondhand. They're just called secondhand retailers in a lot of government statistics. And art dealers usually fall under some kind of specialized retailers. So it's really hard to generate good figures, and that's what the art trade needed. That's what I mean. TEFAF is a dealer-run fair, and they needed statistics to present to the European governments at the time to lobby against and for different aspects of the regulatory things that were going on. And the first thing that governments want to know is how big is it? How many people does it employ? What does it do? All that kind of thing, and all the kind of ripple effects of the art market. So, it's difficult to place it in those rankings, but I think it's part probably of luxury goods, and it's not a insubstantial one, but it's probably lower down on the rankings. I'm not sure exactly where we would place, but it's problems of definition.
It's quite an endeavor you took with the annual report, and
it's an easier one for sure, I think, sometimes, but it's been a fascinating journey to study it.
Absolutely, and it's endless. I mean, you'll never be out of work for the rest of your life. All right, my next question is about the online sales, considering the growth of the online art sales, but also knowing how important and crucial it is for collectors to have seen the works in the flesh, as we say in the trade, before buying online. Do you believe that contemporary art fairs, which abound around the world, will necessarily continue to multiply at this pace, given how essential they are to this ecosystem?
This has been really fascinating to watch. Apart from the ups and downs, is how sales are made. And I think the last few years before COVID, I think it was 42% of sales made by dealers were at art fairs. So it was as much as they make in their galleries. And then a very small portion online. And then we saw that completely reverse in 2020. Obviously, that because there was no fairs on, it was only about 13%. And then online shot up to, I think it was over 40%. And then we've seen slowly the art fairs kind of coming back over the last few years. So I think it was in the report published this week, it was 35% of the sales made by dealers were at fairs. So it's come back, but not completely. And I think and online has gone down a tiny bit in as a corollary of that, but it hasn't gone away completely. So I think everyone's talking about this kind of hybrid dual nature of the art market. I think that's very true, and I think that's something that's definitely changed. And I think even though everyone was so eager, I think especially last year, to get back into the schedule of events and things, I do think people are being more careful about their travel. And it's down to the costs of travel are so expensive for galleries and collectors, and people are concerned about the sustainability of it as well. Going back to that frenetic pace, and we've also seen that other things. Okay, they're not ideal. I would prefer to be in Canada doing this live, but it's not always feasible. And we've seen that there is alternatives, and the alternatives that they work. They work for galleries to maybe not to sustain relationships, but they can make sales through digital channels. They've invested in improving the way their digital channels look. We had the chance during COVID to see what we valued and what we missed. And it was that it's the shared experience and the social nature of the art market that's really important as well, as apart from just from the fact that some things you need to view them in person for the pure aesthetic and visual nature of it. It is definitely the social nature and the thing that you're sharing an experience of viewing an artwork with someone, and you're discussing it with somebody, whether it's at a gallery exhibition or at a fair.
So you mentioned the rising cost of shipping and traveling to go to the art fairs, and will that cause the art fairs to develop on a more national level or continental level at the most? I mean, it's a bit like the museum exhibitions are heading toward.
I think it will. I think that there's going to be a few really important. They're consolidating around a few very important global fairs that have important international outreach for galleries that they will always go to, the big ones, Frieze, Art Basel, these international events. And then, the smaller ones will be really important within regions. And it's just, there was a kind of a real kickback in 2021 with people wanting to travel all the time. And they're calling it revenge travel for the things that they missed. But I think that, that there is a sense from people that I talk to that travel for work and also for pleasure, for collecting, are really auditing their schedules. over the last year. They're thinking, do I have to go to 20 events? No, I can probably go to 10, and they're the ones I'm going to buy at, or they're the ones I'm going to do business at, and the other ones I can take part in, but not actually be there. So,
all right, my last question for you. I know it's not your particular field of expertise, but I would nonetheless like to have your opinion on the growing privatization of art, because it really has an impact on the art market. And I'm referring here to the phenomenon of the financialization in the art market, which seemingly leads to the inevitable greater privatization of the art world, as observed by the actions of major art patrons such as Bernard Arnault, François Pinault in France, or Carlos Slim in Mexico, who all founded their own museums. And now I see the Giacometti Foundation in Paris that's going to open its 6,000 square foot museum in the former Air France headquarters near Les Invalides in Paris, located in Paris. And so it seems before major art patrons would not go above the institution, namely the museum. They would give money for museums to buy artworks. So, public museums, they do have an acquisition committee. I mean, it's really, there's a structure. But the private museums, I mean, they're very opaque in the sense that they generally don't have an acquisition committee. They could buy massively the works of an emerging artist and then selling them one by one on a certain period of time, because when the word gets out that, let's say, Mr. Pinault or Arnault have bought the works of this or that emerging artist. So, I mean, it's something that's really happening, the privatization of art in our world, and it's a concern.
It is a concern. I mean, there's always some potential for kind of crowding out if the, in terms of the expenditure, private expenditure taking over. I mean, my concern is that, again, governments think that the public museums don't need they say, okay, private sector is taking care of that. Then, there is that kind of tendency as well. And, there is a kind of a tendency for some countries to think if the public wants bigger acquisition budgets for museums, they've got to show that they're willing to pay for them. And unfortunately, during the last couple of years, as kind of all the other very essential kind of industries such as healthcare and stuff have taken a lot of budgetary resources, art has got pushed to the bottom of the agenda again in some important regions. So I think it is a struggle. And I mean, I think there are some people doing really good research on private museums. So I think a lot of them have very different motives and different reasons. And I do know collectors that are doing both. So they're supporting public museums and doing things privately, just as a means of access and ways of keeping their collections. So it's a kind of it's an interesting area, but to the extent that crowds out public access is a real issue. I mean, art has a kind of what they call in economics a public good nature, or it's got generates positive externalities just by existing and by being there, but by allowing access of people to see it. So I think for the museums that allow access, private museums that allow access, they're one thing, but for others that are building the financial value, as you were saying, that's a different story again, and that's a concern.
But it's to the benefit of the public, because they get to see works that would not be available for the public if they were in a corporate art collection. So it's multiplies the works available for the public to see. So it's all in all, it's not bad for the public, but maybe for the art market. Anyway, all right. I think that's all the time we have. Claire, thank you very much for your time.
That's my pleasure. It's lovely to talk to you. Really good. And I hope
It's,
that we're
I
all
know
safe from the storm.
you're particularly busy at this time of year with the
It's a
publication of
busy
your
week.
report.
This week
Again,
is really
it must
busy,
be.
but it's great. It's fantastic to get another year kind of looked at and researched, and it's such a cycle now. I'm on to the next one already, so it's nonstop.
So on behalf of everyone here in the audience for the Plural Art Fair, thank you very much for having shared with us your thoughts and your insightful comments with us on the art market, and hope you'll come back again in a future edition of the Plural Art Fair.
In person next time, I hope. Thank you.
Thank you very much.
Thanks
Take
a lot.
care.